Good morning from London. This is Bloomberg Markets Today. I'm Anna Edwards alongside Guy Johnson and Kriti Gupta. With the cash trade just less than an hour away, here's what you need to know. HSBC CEO Noel Quinn is set to retire. The lender making the surprise announcement as it reports a slight beat and unveils a $3 billion buyback. We will speak to executives from the banking sector from Santander and Caixabank this hour. Mercedes earnings plummet 34% in the first quarter, whilst Lufthansa says it will cut costs after persistent strikes hurt profit. We'll get the latest results from a host of German corporates. Plus, traders await the latest inflation numbers in Europe and clues for potential ECB rate cuts. We'll bring you the data as it breaks.
In the meantime, a quick check on these markets here. When you're looking at those European futures, you are seeing a barely marginal green on the screen, a little bit of that for the FTSE at 100 as well, indicating positive trading at the open, but again, only by a tiny margin. We're going to bring you that open live, of course. Euro dollar at 106, cable 125. Markets today starts right now.
Tuesday the 30th. Good morning, everybody. Welcome to the programme. A certain amount of information overload being experienced this morning. There's an awful lot happening. We've had French GDP data out. That looks better than expected. You've got numbers out from a whole host of car makers. Mercedes is out. Volkswagen is out. Stellantis is just hitting the tape as we speak out of Italy. Its numbers, its revenue looks a little bit light. We've got Glencore numbers out. We've got Carlsberg numbers out as well. And we've got to deal with HSBC. We've got to talk about what's happening in the banking sector, as Anna was just saying, a whole host of banks reporting numbers, and we're going to talk to a series of C-suite executives throughout the morning to get you up to speed with what you need to know. So what's our takeaway so far? The car makers look like they're struggling this morning. Numbers out of Mercedes don't look good. Numbers out of Volkswagen, Q1 looks tough. Stellantis out with its figures just a moment ago. That looks fairly tough as well. Elsewhere, the picture's a little bit more nuanced.
Yeah, and some of them just difficult to read. Complicated by the movement of Easter. We get the Carlsberg numbers out. They are sticking to their guidance, which is one part of the dynamic, of course, for this kind of customer-facing business. But they are buying back shares, so there's some, perhaps reasons to be cheerful. But that movement of Easter could have been a little flattering. But on the other hand, the weather was so wet in many parts of Western Europe.
Easter always makes me think of beer drinking.
There you go.
Not Easter eggs, but beer drinking.
There you go. That's because we're grown-ups.
Are we?
Some days.
Some of us are. I thought the banking story was interesting this morning. When you look at the HSBC numbers, buybacks, again, you mentioned this at the top, Anna, the Caixabank and the Santander results, both coming kind of in line with expectations. And it's the warnings, it's the commentary associated with some of these numbers where you are starting to see a lot of kind of cautious commentary that we're very worried about, even in the car space. Competition, economic conditions, currency headwinds has come up a couple of times in some of these earnings reports as well. So I'm curious to see what some of the execs say about that.
Do you know what sent a shiver down my spine this morning? And that was the SocGen story. Delta One traders maybe putting on positions that hadn't been caught by the risk management team. The Curvial kind of springs to mind again. Then you think about what happened with bearings in the past.
Yes.
But just in an environment where so much is going on and so much is changing so quickly, this year has been a year of massive change. Just that risk management story around the banks. I think a lot of people will be looking at that story this morning and having flashbacks.
Right, yeah, that's really interesting because sometimes you look at those stories and you think they look idiosyncratic, they look very specific to the people involved, the situation. But you're right to flag that sometimes there can be a wider relevance. I'm particularly interested to look at the Glencore numbers, but not necessarily because of what they tell us in the moment, but to see if they're giving us any update around their coal business. Not that one is expected today, but they're giving us various numbers just around cobalt and marketing spend and all sorts at the moment. But really interesting story from the team overnight saying that back in November they said they were selling their coal assets, all part of that arrangement to try and get hold of tech over in Canada. They were prepared to sell certain coal assets, but now top shareholders, which includes former CEO Ivan Glassenberg and the QIA, some of these shareholders, we understand, according to our reporting, want to keep hold of these coal numbers. So that's going to be an area to watch when it comes to the mining sector, for sure.
Makes a lot of money.
Yeah, exactly. That being the key reason to want to keep it.
Makes a lot of money. Why are we selling it?
Yeah, well, I mean, and there's energy transition, but if you're going to need it in the transition, there's also an argument and a conversation to be had there, isn't there?
Can we talk a little bit about some of these car makers as well?
Yeah.
Stellantis is the one just recently hitting the tape. Their first quarter net revenue coming in a little bit light as well. But it's the Mercedes, it's the Volkswagen story. Specifically Mercedes, those numbers were not pretty at all, and they're really talking about kind of their strategy backfiring on them to some extent.
So if you look at it's interesting, let's pull in Porsche as well from Friday. there's definitely an issue with some of these car makers. I was just talking to Ollie Crook about this, about the fact they've got product mismatch in terms of kind of where they are in their cycle and renewals. BMW is the only one that at the moment is producing decent numbers in the first quarter, and the reason for that possibly is that they've got a better lineup right now, and as a result of which newer vehicles means that actually people are buying BMWs rather than maybe going out and buying Mercedes or VWs. So maybe that's the story at the moment as well. But it's interesting, they're all talking about this idea that we're troughing in Q1 and we see a pickup from there. Does the market believe the pickup? There's a lot of faith being exhibited here.
Absolutely. So a tricky first quarter, but sticking to the outlook. That seems to be where we are, to your point about maybe the second quarter then is a little brighter. Like, you know, it's just no change in outlook at Mercedes and VW, despite some of the weak spots in the first quarter. I'm really interested with the Chinese car makers, of course, and what kind of threat that poses to European car makers. I mean, really interesting to see, and I know this is only perhaps at the margin, but some European car makers have the complexity that they've got deals with the Chinese. So, for example, VW in a partnership with one Chinese company, XPeng. You know, there are complexities to this. They've got a shareholding in that business, for example.
Yep.
I was going to say for Volkswagen, it's expressed really important. You mentioned that partnership. They actually cited more intense competition as one of the things that they're really worried about. I imagine that's coming from the Chinese as well. Whereas Mercedes, also a little optimistic on the Chinese market, but still talking about that U.S. consumer story kind of guiding them through.
Is there strength at the upper end of the market? Is that persisting? Did you see that in Porsche? Maybe not. Do you see that in Mercedes? Maybe not. I think there are questions being asked about that kind of upper end of the market, which has done so well. We're going to do, what are we doing later? We're going to do planes, trainers and automobiles.
Excellent.
So we're looking forward to that.
It's as if you came up with it yourself.
I didn't. No, I didn't. I take no responsibility. I kind of took us in that direction, but some genius on our team came up with that. But Adidas is doing well. The Samba Boom. Apparently.
You know how we normally are very good at speaking American, and not just because you're a bit pretty, but just because, you know, that's the vibe of the thing.
Yeah.
So I was honestly naively going with planes, sneakers and automobiles until our producer pointed out to me the error of my ways. Anyway, we will revisit that juvenile theme a little bit later. Let's talk about Samsung. We have Samsung numbers out overnight, and this, of course, enormous chip maker, world's biggest chip maker, profits coming in better than expected. And what's really interesting, if you look at the operating profit here, it tells a really complex story because last year was dreadful, so it's not difficult to beat on that in that sense. It's not difficult to show a pickup from last year, 4 times what we saw last year, but it's still well below 2022 levels, just illustrating the real sort of backtracking that we had seen post the sort of COVID pickup in sales of all things electronic.
Well, it's interesting, on top of the chip sector, we start to see we had the TSMC numbers come out really strong, the ASML numbers come out quite weak, and it feels like markets and even watchers from the outside who are looking at these chip stocks and chip companies as kind of bellwethers for the economic story are seeing very different things. The fact that Samsung is posting such a big profit despite the currency weakness you're seeing in the Korean won, I think is very significant, specifically because the Bank of Korea had already, I'm macroing this all the way, but specifically the Bank of Korea had warned about that currency story. So to see that profit despite the weakness, I think is quite a big deal.
It's never far from a translation effect.
Yeah, I would have thought the currency in some ways would work in their favour, wouldn't it? Because they're earning dollars and
flipping it to won.
Flipping it into won. So maybe that's
a
net positive. But it just demonstrates once again just how cyclical that business is.
Yeah.
Which we're not factoring into Nvidia, which I think is incredible.
Well, and that's interesting because the Samsung story, on the one hand, it's the sort of old school chip story, not about AI, because this isn't a business that is like Nvidia at the very forefront of AI. But even for Samsung, our reporters telling us that AI is giving a boost to this business. So there's the cyclical, and then there's that structural boost from the AI story.
Which may be cyclical. We'll wait and see.
Yeah, let's see. Yet to be defined.
No, you just said it. I have nothing to contribute on the Samsung story anymore. So we should probably go to Daybook, I think, which is kind of the other things we're watching for. We've got several of the earnings stories that we're watching, but we have some economic data to keep an eye on as well. At 10 a.m. UK time, Euro area CPI, that April preliminary numbers, will be coming out as well. Later, it's earnings in the States as well. We've got some of my favorites, actually. McDonald's, Starbucks, Coca-Cola. I'm kind of hungry already. Amazon and Eli Lilly, all coming out. We're going to talk about that kind of cloud theme, the AI theme, with Amazon in particular. Eli Lilly, you've mentioned Novo Nordisk and the kind of drug space.
McDonald's and Lilly coming out on the same day? Maybe there's some sort of...
I will reserve comment. I was going to make like an Egg McMuffin comment, but whatever. And then later, of course, the FOMC meeting begins ahead of that decision tomorrow. Remember, tomorrow as well, we get that kind of buyback announcement from the Treasury as well. So we'll see if we start to get a little bit of a ramp up in the trade, at least, ahead of what's tomorrow going to be a very macro day.
Just don't bring the Egg McMuffins on set. They get all over your clothes. We've learned through experience. Let's think about so we've got the earnings stories coming out. I mean, on the macro side, this is to something you'll like, Kriti. Of course, we've got all that inflation data. We've got Eurozone inflation data due out. It's expected to stay around 2.4%, but we are warned that this is going to be a little bit volatile in the months ahead as you kind of get through those base effects around energy. And we actually heard from De Guindos just yesterday saying that the inflation outlook faces substantial risks, and he was talking about upsides to inflation. Well, he was talking about some of the risks around geopolitics, which is, easy to say and harder to price, perhaps.
So what I think is interesting here, though, is that so you factor in the Fed, and then you bring it to Europe, and there's potentially some downside risk here. So you think about French GDP this morning, picks up, does better than anticipated. Are we finally seeing this recovery in the Eurozone economy? It's going to be, albeit from a very low base. But then you think about the fact that maybe the ECB won't be able to cut as hard as it maybe would like because of the fact that the Fed's on hold, and then maybe you get this downside risk coming through, both to inflation and to growth. And I wonder, kind of, we're talking a lot about does the European equity story outperform? Does it outperform in an environment where the ECB can't deliver the rate cuts and can't support the economy in the way that maybe the market's anticipating at the moment?
I thought the French numbers were interesting in that context in particular, and you had mentioned this earlier. I have my eyes on Spain, obviously,
Spanish
100%.
Yeah.
I am the Spanish correspondent. Going to Spain shortly, so I'm very. My focus is there, but I'm very invested. I've literally put my dollars to work there. I think what's interesting, though, is we saw the Spanish numbers come in hot, and how many times we spoke to Jamie Rush about that being kind of a leading indicator, whereas French numbers have consistently come in quite weak. The fact that France is perhaps seeing a little bit of a pickup, I thought that was interesting because that's actually more in line with the Spanish story than it is with some of his other peers in Europe.
Well, it's a good day to have two Spanish voices on the programme, isn't it? We're going to be speaking about the Spanish banking sector today, and given the politics and the turmoil there, given the interesting dynamics around the Spanish macro story, that's really interesting. But also back to your point about the ECB and whether it goes before the Fed, I think that's really interesting when you're thinking about net interest margins and what it is that really matters for these businesses. How are these banks concerned that the transmission mechanism that the ECB is assuming might be compromised if they are the only movers, if they're first movers, but maybe the only movers, and others are less, willing to cut rates at this point?
It's going to be a huge problem, particularly if treasuries stay high. You're not going to get the read-through into the European government bond markets. They have a gravitational effect on each other. But kind of, are we going to see the effect coming through from the ECB, even if it does cut? And is it going to be as big as maybe the European economy actually needs?
The wage story really matters. I'm surprised we've gone 12 minutes. You haven't mentioned Lufthansa yet, and the story out of there in particular. Would you like to?
I mentioned planes.
Yes.
I had mentioned the planes.
Setting it up for later.
Air France is going to be, we think, out very shortly. So we'll get those numbers. But Lufthansa's just a strike story. Like, plain and simple. Excuse the pun. They have...
We're all about puns this morning.
Oh, yeah. They had those massive strikes. They warned on the 15th. We knew this was coming. What I didn't think we saw coming was this big sort of dropping of projects that they're pushing through at the moment. And they're basically going to have to be in cost-cutting mode to deal with this. So it's going to be interesting to see kind of if that's just a one-off. What are we learning from Lufthansa? Other airlines are doing much better at the moment. If you want to look at the chart on the terminal, have a look at Lufthansa, Air France and IAG. IAG is up and away. Lufthansa and Air France are going in completely different directions. The transatlantic is working for IAG. It's not working in the same way for the others. US
eco-exceptionalism boosts British Airways across the Atlantic. Right, that's planes, trainers and automobiles. We've had all of that this morning. We will return to those themes later. Banks didn't fit with that nice, neat little packaging, but banks certainly very much in focus this morning. Coming up, Santander and Caixabank report net income for the first quarter, beating estimates. We will speak to the executives from both banks shortly. Plus, Mercedes earnings plummet 34% in the first quarter, weighed down by model changes in Asia and sluggish demand for EVs. We'll dig deeper into auto earnings later in the show. If you have questions for our guests, please do get in touch with the team that puts together this programme. IB plus TV Go. That's the function you need to use on the Bloomberg terminal. This is Bloomberg.
Wednesday, The Fed decides.
Jay Powell pumping the brakes on rate cuts.
Hikes are off the table. No cuts looking perhaps a little bit more likely.
You can't say there's a whole lot wrong with the U.S. economy.
Trust Bloomberg to bring you the fastest coverage and exclusive analysis, including Powell's press conference.
Our policy rate is likely at its peak.
The threshold to cut rates is a little higher.
We're redefining patience.
Bloomberg Surveillance. The Fed decides. Starting at 1:30 p.m. Eastern. Context changes everything.
Welcome back. 41 minutes to go until the start of equity trading here in Europe this morning. We are dealing with a deluge of corporate numbers. The latest to hit our screens, Air France. And it looks like the EBITDA line looks a little light. It is the net loss at 522 million versus an estimate there of 461 that really stands out. Ben Smith is talking about the need for cost cuts. What I find interesting as well is that the operating loss actually is pretty much in line with expectations. It's the net loss that is bigger over at Air France. Remember, these are companies that are still dealing with the fallout from the pandemic in terms of their financing, and Air France KLM, therefore, looking to cut costs. Q1 losses are widening. Sounds like a very similar story to the one over at Lufthansa, but not the same story as the one we're seeing with IAG. IAG is the white line on your screen, Lufthansa and Air France blue and yellow.
OK, so that's the aviation story for the moment. Let's return to the banking sector, where we've had a host of corporates reporting, a host of banks reporting. We've talked about HSBC, later on Caixabank. Right now, Santander in focus. Their first quarter profit gaining as lending income jumps by 18%. Let's get under the hood of the guidance, though, coming through from this business. I'm pleased to say we're joined by the CFO, Jose Garcia Cantera, who's with us this morning from Santander. Very nice to speak to you this morning, Jose. Let me start with the big picture and the guidance this morning, because I see a headline across the Bloomberg terminal says Banco Santander says it may over-deliver some 2024 targets. What message are you trying to communicate to the market this morning?
Good morning. Thank you for having us on the program again. We've had an excellent start of the year from an operating and business perspective. Our revenues are up 10%, profits up 11%. If we annualize the Spanish banking tax, which was charged in the first quarter, we got a return on tangible equity of 16%. And these numbers make us very, very confident we are going to be hitting our targets for the year, which is double-digit growth in revenue, with cost to income improving below 43%, return on tangible equity at or above 16%, and with capital growing also in the year. So very good start of the year, and in a good trajectory to meet our targets.
OK, on a good trajectory to meet your targets. Can I ask what assumptions you're making around the ECB, Jose? Because the ECB preparing for a rate cut in June, that is the market's expectation. But increasingly there is interest in this idea that the ECB might cut, but other parts of Western Europe, North America, may not be cutting interest rates quite so quickly. Do you have any does that factor into your thinking about where net interest margins go from here?
Well, the good thing about Santander, and this is a differentiating factor, is our diversification. We have businesses in Europe that will benefit from lower rates, but also businesses in South America and in the consumer side that will also benefit as rates go down. We have negative sensitivity to rates in South America, positive sensitivity to rates in Europe. So we will have a positive combination, and now we see NII sequentially growing quarter after quarter this year, even with the current estimates for rates in the US, South America, and Europe.
Good morning, it's Guy. What's the outlook for a pickup in revenue in Brazil?
Brazil will benefit from lower rates. Rates peaked at 13.75. We think they will be at 9.5 this year, even lower next year. Lower rates means more activity, better asset quality, but more importantly, as I said, our sensitivity to rates in Brazil is negative, which means that revenue will benefit from lower rates. We are starting to see that already in the first quarter, and it will accelerate towards the second half of the year. So the outlook for revenue in Brazil with this level of rates and the outlook for even lower rates in the second half of the year or next year is even better.
Where are you seeing signs of consumer stress? Is it in the United States? Is it in Europe? Is it elsewhere? Just give me a sense of how you think the consumer is holding up.
Well, the key variable to assess consumer stress, as you call it, is the labor markets, unemployment. Unemployment is very, very strong everywhere. We are seeing peak employment figures in many, many countries with very low unemployment levels. That's the most important variable to assess asset quality. And we see no signs of asset quality deterioration in any of the countries where we operate. So we are not seeing those signs of stress, looking at it from the point of view of asset quality.
Jose, it's Kriti in London. We'd be remiss to not talk about some of the political situations, developments happening in the last 24 hours over in Spain. As the largest bank in Spain, and of course with larger exposure around the world as well, talk to us a little bit about the read-through perhaps into your bottom line from the geopolitical uncertainty. We know historically we have seen outflows from a lot of Spanish banks when we see some of these flare-ups, especially ahead of those Catalan elections on May 12th. What is Santander's view when it comes to the geopolitical uncertainty there?
Well, the Spanish economy is doing much better than the average economy in Europe. We now think that GDP growth this year is going to be around 2%. We are creating employment, jobs, and employment levels are really low. So the macro picture in Spain is very, very good. You've seen our results. We are at historical levels in terms of revenue, also profits. Same for the other Spanish banks. I think the activity in general in Spain is very, very strong, and banks are benefiting from that. So very strong outlook, actually, for the Spanish business from the point of view of the banks in the second half of the year.
Okay, so the macro perhaps outweighing some of the uncertainty there. Let's talk a little bit then about the uncertainty on the European level, especially when it comes to talk about a capital markets union. There have been a lot of pushback from the banking community that, in fact, when you do want to see that cross-border consolidation, there may be parts of the European economy broadly that may not be able to capitalize on it. Where does Santander stand on the benefits of a CMU?
Well, I think it's clear that Europe needs to progress on a capital markets union. Europe is a very fragmented market, and at the end, consumers, companies, businesses, small businesses are not benefiting fully from the economies of scope and scale than Europe can offer. So I think this is absolutely a necessity for Europe. Progress has been made. We've seen recently some progress in terms of the deposit insurance scheme for European banks, but still much more needs to be done. I think all banks will benefit from that. We are one of the largest banks in Europe, and obviously we expect that to happen, the sooner the better.
Jose, just briefly, picking up on Kriti's question about Spanish politics, are you hoping that we enter a period of stability given the developments over the last week?
Well, I think so, and I hope so. But again, the Spanish economy is doing very, very well. So to some extent, the fundamentals of the Spanish economy, which have performed well in recent weeks and months, despite what you call uncertainty, I think will continue. Again, GDP growth this year is going to be much better than other European countries. Labor figures are very, very strong, and we think that will continue into next year.
Jose, thank you so much for joining us. Santander CFO joining us once again. Jose Cantera, we thank you very much for your time. We'll stick with the Spanish banking themes. Don't miss our exclusive interview with the Caixabank CEO. That's after the Spanish lender posted a first quarter net income that beat estimates this morning. More on Spanish banking shortly. This is Bloomberg.
I want to share with all of you what I have finally decided and have already informed the head of state this morning. I have decided to continue on with even more strength at the helm of the government of Spain. This decision is not a be-all and end-all. My wife and I know that the smear campaign will not stop, We have been suffering for 10 years. It's bad, but it is not the most relevant thing. We can cope with this. The important thing that is truly transcendent is that we want to thank from the bottom of our hearts all expressions of solidarity and empathy that we have received from all walks of life.
Prime Minister of Spain, Pedro Sanchez, they're vowing to stay on in his role after threatening to quit just last week. Now, on the surface, it feels like perhaps some of the geopolitical certainty and the domestic uncertainty may actually feed in to some of the Spanish bank story. Instead, at least when it comes to Caixabank, we are actually getting some pretty positive numbers here. I just want to reiterate them here. Actually increasing their guidance as their lending activity really taking a little bit of a hike up. Plus that net income beating estimates as well for the first quarter. We are now joined by the CEO, Gonzalo Gortazar, joining us this morning, talk a little bit about it. A pleasure to have you on the program. Thank you so much for joining us this morning. The outperformance of Spain is catching a lot of investors, economists alike, perhaps by a little off guard. Talk to us about the strength in your numbers and how sustainable that is, given that even though the Spanish economy is looking good right now, inflation is still ticking higher, unemployment is still ticking higher. How sustainable are your results and, by extension, the Spanish economy's outperformance?
Well, thank you very much, Kriti. Pleasure to be here again. I would say precisely that's the main point of our results. This first quarter of 2024 is, again, a consolidation of the trends we've seen in the past, meaning that our activity at these levels of profitability is clearly sustainable. The economy is actually helping. We're expecting close to 2% growth this year, and we're actually creating jobs at close to 3% per annum. Job employment last 12 months was 600,000 in Spain, which is pretty good. Inflation, particularly what we call core inflation, underlying inflation, is coming down, which is good news. The last numbers for April were pretty good. Consumption is standing well. Generally, obviously, when we look at the numbers in Spain vis-a-vis the Eurozone, it looks like we are in different continents. And obviously, at this stage, we're seeing this trend going forward.
It does feel like you're on a different continent, 100%. And again, to a lot of investors and even my own kind of question, talk to us a little bit, though, about the risk factors here. When you do start to see these inflation tick-ups on the macroeconomic basis and perhaps the prospect of the ECB cutting in June, what goes wrong? Where are the risk factors? What are you a little bit more cautious of when it comes to the Spanish economy?
Well, I would say not that different from what we look at the Eurozone. So we have geopolitics on the one hand, and on the other hand is the so-called soft landing. Is it going to happen? How soft? Clearly, we're at a stage where we are expecting a move by the ECB in June in terms of our first rate cut. But then there's very limited visibility as to what happens next, because obviously the numbers in the US and the overall situation of the economy it's not allowing us to see a very clear sort of downward trajectory after a first move. That's what the markets are indicating as well. So we are subject to the same, I would say, big trends that the rest of the Eurozone. The differential speed of the economy is mostly associated to recovery from the pandemic times, which were very tough in Spain, and obviously tourism and immigration, which is also helping the economy quite a lot. And I do not see those reversing anytime soon, to be honest.
Gonzalo, good morning. It's Guy. You're talking about uncertainty. How much certainty, therefore, can we assume you have about your future numbers, given the fact that we don't know whether or not the ECB is going to cut once, twice, 3 times? How much visibility do you have on your net interest income lines going forward into the rest of this year?
Well, today we are upgrading actually our net interest income guidance to mid-single-digit growth during this year. So clearly we're seeing good visibility there. What's important is to remember that we actually come from, not that long ago, negative interest rates, where the 4% rates may come down to closer to 3% over the next 12 months or so. Still, those levels are actually pretty good levels for the economy and certainly for the banking system and ourselves to be profitable, to be efficient, and to grow.
Okay, so how much of a difference would it make to your bank if the ECB cut once or 3 times? What is that's 25 basis points and 75 basis points, maybe 100 basis points. How big a difference would that make to your bank? Given the uncertainty we have, I'm just kind of wondering what you think is going to be happening in the back half of this year.
Well, the impact on our net interest income, more or less, is approximately 5% for 100 basis points of a cut. That is, give or take, 500 million a year pre-tax compared to the 1 billion post-tax we've made a quarter. So it would have an impact, but a limited one. And that is a full 100 basis points for a full year, which is not certainly something we're expecting to see sooner this year. So I'd say we're pretty resilient towards lower levels of rates. And on the other hand, our economy, our activity, as the economy would do better, asset quality would perform well, and hopefully we'll have in large volumes, we would have some offsetting factors to these lower levels of rates. So we're not particularly afraid of that move in interest rates.
OK, so resilient to lower rates levels. Good morning to you, Gonzalo. Can I ask you about the visibility around buybacks and returning money to shareholders in general? You've previously given numbers from your strategic plan that you're going to reach 12 billion euros in terms of returns. Do you have any more guidance, any more detail as to the timing of any of that?
Well, we confirmed that plan of 12 billion. We have already given back 7.4 billion. So we have an extra 4.6 billion, and that should be a combination of some special measures and obviously the payout for fiscal year 2024, where we've already said it would be between 50 and 60% of earnings. So we are actually confirming that guidance, and we should be seeing that capital distribution taking place over the next 12 months.
Can I ask you about the backdrop in Spain, Gonzalo, the political backdrop? Clearly, we started this part of the programme with a clip from the Prime Minister, and there's been a great deal of instability and people asking questions about Spanish politics over recent days. How much is it important to you that we have stability from here?
Well, thank you, Anne. The reality is, if you look at markets over the last week, they have barely moved on these news. And I think this is a good proof of investors looking at Spain and seeing the good fundamentals, both of the economy and also of the institutional system. We obviously would like to have more consensus, agreement on some of the biggest and more important reforms that Spain need, controlling the public debt over the long term, sort of fiscal consolidation path, increasing productivity, the housing market where we are seeing a scarcity of supply of new housing. All these things are important. They would benefit a lot from large majorities. So we would all want to see that. But at the same time, I think we're all adults and looking at what is the difficulty in politics today, taking it with a pinch of salt.
Gonzalo, is there an opportunity cost there, though, as we kind of wade through some of these domestic political situation? Because of the gridlock you're seeing on the fiscal space, it feels like there's a lot of EU funds that Spain isn't able to unlock. At the same time, you're seeing a lot of government aid to everyday citizens, especially around energy costs, also dissipate. It feels like there's missing funds here when it comes to what Spain and, by extension, your bank could actually capitalize on. Your thoughts on that?
Kriti, there's no doubt that we would benefit from having stability, clarity, and a large consensus in making all this happen, including the reforms that we need. At the same time, I think Spain is doing reasonably well in getting access to the EU funds and next generation funds. Another question is how it will ultimately reach businesses and general population, where there's still some room to go. But there is on our side, I think, and the government side, some clear focus on making that happen. But if you ask me, would it be better if we didn't have these sort of ups and downs? Absolutely, it would be, and we would all look towards our politicians to try and seek consensus and move on.
But talk to us a little bit about a number then. Again, in terms of the fiscal policy specifically, how much kind of growth, how much positivity can we look at in terms of your bottom line from some of that, either consumer aid from the domestic side or that fiscal funding from the EU broadly? Is there a number you're watching?
Well, there would be, and there is already some impact from the EU funds on the economy. Clearly, economists are unclear as to how much could that be, but on a cumulative basis, and hence looking forward for the next couple of years or so, a few percentage points, single digits of GDP, it would be ideally or theoretically what it could imply. I have to say the consumer is doing pretty well. Our consumer lending portfolio, for instance, just these 3 months have grown by 2%, and new consumption loans are growing at 15% rate. So there it's pretty good. But clearly for the business front, to give some certainty, confidence, and some good funding longer term, that would be beneficial. And again, it would accelerate our business lending, which is at this stage pretty stagnant.
Gonzalo, great to have you on the show. Thanks for your time this morning. We really appreciate it. Busy morning for you, I know. That is Caixabank's CEO, Gonzalo Cortazar. Thank you very much indeed for joining us. We're going to stick with the banks next. We're going to turn our attention to what is happening at HSBC. We'll look for its shares to open in London. They're already gaining in Hong Kong. The lender announcing the unexpected departure, though, this morning of its CEO, Noel Quinn. Got some new buybacks. That's certainly going to help. We'll talk about that stock, all the other stocks you need to be watching, and there are many this morning. That's all coming next. This is Bloomberg.
Welcome back to Markets Today. We are 15 minutes away from the start of cash equities trading. The futures picture looks fairly muted for Europe. It looks very muted for the US, either side of the flat line over in the United States. Let's talk about the markets in 2 minutes. From Bloomberg's Markets Live blog, we welcome to the programme Ven Ram. Good morning to you, Ven. I've just seen that the French April CPI number has just dropped, rising 2.4% year on year. That's a little higher than the estimate of 2.2%. But your broad approach to this inflation, this raft of inflation data we're going to get out today, you don't think it's going to move the dial too much for markets?
Morning, Anna. I don't think it is going to move the dial too much. Why do I say that? Because if you look at the inflation prints that regional inflation prints that we've been getting since yesterday, it points to somewhat short of a higher number from the Eurozone inflation data today. But the markets are already well priced for a June liftoff from June rate cuts from the ECB. It is what happens to the ECB's rate trajectory beyond June that is in contention. The markets at the moment are thinking there will be 3 rate cuts from the ECB this year. That seems entirely reasonable, but the key question is, what is the ECB going to do if the Fed is not able to cut rates as much as the markets think they will be able to?
Yes, and that takes me to the next question. As we wait for the Fed to start their meetings, of course, we have to wait until later tomorrow to get the results of their deliberations. But the dollar has been strengthening on bets that the Fed may boost its hawkish rhetoric. What's your expectation, Ven?
I think that the Fed has kind of painted themselves into a corner by indicating 3 rate cuts for this year. I don't think that is going to be possible if inflation continues to play out the way it has been. In fact, if you look at the inflation premium in the markets, that is about 52 basis points. That's the highest, and you don't get a number like above 50 basis points very often. That suggests that inflation is going to be sticky, and it's going to be very hard for the Fed to shoehorn 3 rate cuts this year. So I think they are going to be acknowledging that prospect that they won't be able to cut rates as much as they thought they would be able to cut. So I expect the Fed to retain the language saying that it would be inappropriate to cut rates if inflation doesn't converge to 2%. So very much a hawkish take from the Fed is what I'm expecting. Anna?
Ven, thank you very much. Bloomberg's Ven Ram on the markets. Stay where you are, in fact, Ven, because Kriti Gupta has a chart that takes us back to the inflation story. So she'll come back to you now. Kriti.
Yeah, we don't want to let you go yet, Ven, but I do want to bring this chart to everyone's attention because it's that inflation story that we are indeed talking about now, as we know, and I think watchers of this program will know that I've been very obsessed with the Spanish story, as shown by just simply the last 48 hours. But I think the inflation story is important because Spain's kind of inflation story can often be seen as kind of a canary in the coal mine for the rest of the European economy to a lot of economists' chagrin. This chart shows, though, that this is why it might matter this time, because traditionally you're seeing all of these lines, which is basically CPIs from all of these European economies, all in sync. If you were to zoom in to that right-hand side of the chart, you would see that they are not, in fact, harmonized at all. In fact, if you actually look at that pink line, which is that Spanish inflationary number, you're seeing a pickup in a way that you haven't actually seen a pickup in some of the other numbers. Now fold in the French numbers that Anna just brought in. Could this be an early cause for concern? Then hop back into this conversation. Let me put that question to you. Is there kind of more concern about an inflation read-through from the periphery of Europe than perhaps from some of those core economies?
Absolutely. I mean, we've been seeing sticky inflationary trends, and just yesterday, the ECB Vice President Guindos warned about a bumpy path ahead. So, which is why ECB's Lagarde and others have been averse to painting themselves into a corner, saying that they are not pre-committed to any rate path. And if you get those kind of bumpy inflationary readings, especially services inflation has been sticky, I don't know if the ECB will be able to push in 3 rate cuts this year as the markets are converging. That is especially so if the Fed is not able to get through 3 rate cuts. I don't think the ECB may be able to do 3 rate cuts. 3 is a reasonable number, mind you, given that we have got 4 more policy reviews in the second half of the year, assuming a June first cut. But then it's a question of the reaction function to what the Fed does and what happens with peripheral euro area inflation, as you point out, Kriti.
Ben, great to catch up. Thank you very much indeed. You want to get what Ben is thinking, you want to get what the rest of the team is thinking, you can do that really easily. There's this fantastic function on your Bloomberg. MLIV Go is the function you need to plug in. There's a few TLIVs that have been running as well this morning. There's a good one on HSBC. I would thoroughly recommend that. Let's take you back to the corporate news. This is a satellite deal. SES has agreed to buy Intelsat, and that has been unanimously approved by both boards. $3.1 billion, the cash value for that deal, plus some contingent value rights that is being attached to that. I think we may have had some indication of this over the last few hours. Anyway, that deal now being confirmed, it looks like. Let's figure out what else is going on this busy morning. Joe Easton, over to you.
Morning, guys. We have got a surprise exit at the top of the UK's largest bank as Noel Quinn retires from the company after almost 5 years at the helm. He has overseen a recovery in HSBC's share price following the pandemic, with that stock almost doubling from that low back in 2020 as they refocused on Asia. And as analysts at Jefferies note, this move was not telegraphed, so it is a surprise for the market. In terms of the earnings, they are looking pretty strong out of HSBC today. The key number, the net interest margin, is better than expected once again, and they are doing a new share buyback of $3 billion, so that should be pretty pleasing. The market was expecting around $2 billion, so better than expected there. There is a bit of an impairment that looks to be on the Chinese real estate business, but as we can see, the stock in Hong Kong did get a little bit of a boost, up 1.5%. Potentially that news of Quinn leaving maybe taking the edge off that earnings beat for the company today. Then in terms of autos, we've got a number of companies reporting today, including 2 of the giants out of Germany, VW and Mercedes. Neither, though, looking very good according to the numbers and the analyst expectations. Mercedes reporting a 34% drop in quarterly earnings. This is as they try and roll out some new models, and also electric vehicle demand looking a bit sluggish according to analysts. Now, profit over at Volkswagen also down by around a fifth. They say specifically there has been a slow start to the year, so pretty negative in terms of their commentary there. We can see that Mercedes has been the outperformer. The EV demand worries weighing on Volkswagen, but potentially that now spreading over to Merck as well today. We'll also keep an eye on Stellantis, which does look pretty downbeat also over in Italy. Finally, we're looking at beer with Carlsberg giving some numbers. Quarterly organic revenue of over 6% is slightly better than expected. That is a decent beat on some of the full-year guidance as well, according to some of their outlook commentary. But there has been a bit of an impact from the delayed start to the Easter period and also some poor weather, according to the lines in their statement. So not all positive in terms of that one. But we can see from the screen here, it has been a pretty downbeat year, 1 year for the drink stocks. Carlsberg already down 15% over the past 1 year. And we can see AB InBev, Heineken and Diageo also seeing pretty strong declines. People trading down down is the main issue there. But if we look at the Carlsberg analyst ratings, it doesn't get much better than this. Not a single sell rating. 18 buys on that one, so potentially the bad news already priced in. Keep an eye on Carlsberg over in Copenhagen.
Joe, thanks very much. Joe Easton from our equities team with a host of stocks that are in focus today. Guy, you mentioned the T-Live blog running on the HSBC numbers, and Joe flagging the departure of Noel Quinn. He's looking forward to rest and relaxation,
sounds
apparently,
very nice.
Which sounds lovely, but also a portfolio career. So, you know...
Also sounds very nice.
Yes, it all sounds lovely. Very relaxing thought at 7:53 in the morning.
I imagine running a bank is quite stressful. Plus, he's had to deal with the whole Ping An story and the separation of the business that they were suggesting. He's definitely had his work cut out for him. He was the interim. They brought him in as a kind of interim CEO. He ended up then taking over. It's interesting that Tucker's kind of outlasted him, I think, is fascinating as well. It's just kind of, is this a surprise? What was going on behind the scenes? There's a lot of
and there's been a lot happening on the China front. You mentioned the Ping An story, also just the sluggishness of the Chinese economy. That's obviously weighed on the business. And the new security law that they brought in Hong Kong and the way that the bank reacted to that despite UK pressure, also all very in focus. Anyway, that's HSBC. Other things... Plenty of other things to watch this morning.
Yep. Plenty of other things to watch, but we're sticking in the banking space. I'm still very curious to see how these Spanish banks actually trade, especially when you did have that optimism. HSBC had rallied in the Hong Kong trade as well, coming off that buyback story as well. But there's plenty of other earnings stories. Lufthansa's on my radar, Air France as well. This is the Guy Johnson effect.
We're going to be doing planes, trainers and automobiles in the next hour. Keep an eye on Logitech as well. I would keep an eye on SocGen. I'm fascinated to see how this trader story maybe impacts that stock in terms of their risk management. Anyway, European equities are about to open. We're back in a moment. We'll continue the conversation into the open. That's next. This is Bloomberg. Tuesday the 30th, welcome back. 2 minutes ago until the start of European equity trading. This morning we have an awful lot of corporate news that we need to digest. Cars look weak, the airlines look a little bit weak. This morning is basically about looking at single stocks, figuring out what the story is with them, and then trying to form some sort of coherent picture as to what is happening with the earnings season. Not sure we've quite got to that point yet, but net, it looks like, actually, on balance, maybe we're a little bit negative. But I'm looking at some of the opening prints this morning. There are some standouts. Logitech looks like it's going to have a good morning this morning. Some of the banks look like they're going to be interesting as well. HSBC, there's a lot to talk about there. But there's an awful lot of news here. Do you want to talk about Adidas? Do you want to talk about planes? Do you want to talk about what's happening with the banks? Should we talk about cars? Where do we want to start?
Take your pick, Anna. Take your pick.
Well, I'm just going to go to Spain for the banking sector in the short term.
That's Kriti's job.
That's Kriti's job. Well, just to give... Because we're waiting for the GDP printouts of Spain, which is very well timed, because there's been a lot of political turmoil in Spain, of course, but we spent the last... half hour of the programme trying to get under the hood of that and what that means for banking in Spain. And, of course, there's a desire to see stability, but actually the commentary coming out of Spain is extremely positive when it comes to the underlying macro stories. And we'll see in around 45 seconds' time whether we get something positive confirmed for the Spanish economy.
It'll be interesting simply because the last time we saw this kind of political uncertainty, and look, Spain goes through several iterations of this often, but when we had specifically when it related to, like, the Catalan story, you did see active outflows and deposit outflows come from, like, the Santander, Caixa, BBVA, among others. So it'll be interesting to see what the deposit numbers look like in the next couple of days. But again, I've got my eyes on, I feel like we all are kind of keeping an eye on each other's beats. Mercedes, Lufthansa, I think it's a German story this morning. That's what I'm looking
There is
for.
a lot of German news out there this morning. It's interesting, actually, the chemical sector is looking interesting this morning. Some quite positive numbers coming through.
Guy, I'm trying to lean into your area, and you're not cooperating.
Believe me.
He's big into chemicals as well.
It's coming up. I love the chemical story. Interesting little indicator. OK, there we go. Markets are open. We are expecting a positive start to the day. So net, actually, maybe you could argue that we are in a positive performance coming out of the earnings story. Can you connect the dots there? I don't know. So the FTSE 100 oscillating between positive and negative territory already. We do have an awful lot of corporate news that we need to digest and throw in. We're also going to get a lot of news later on today as well. So I just want to flag that. You've still got big tech reporting numbers, and that is going to be a story that we're going to have to factor in later on today. So I think today is going to be maybe a day that delivers maybe a little bit of volatility.
Well, maybe.
Stocks.
We were just hearing from our colleague Ven Ram on the Markets Live blog that he didn't think some of these macro data points were going to produce a lot of volatility today. We'll see if that is the case. We've got a lot of stock news, of course, as you rightly point out. But on the GDP front from Spain, just as we were discussing the positivities of the Spanish economy with two Spanish banks, we get a strong print on GDP year on year then, Kriti, up by 2.4% on that Spanish GDP number, up by 0.7% when you look at the quarter-on-quarter number. And they were talking about job creation and the underlying strength of the Spanish economy quite positively.
Interesting that that is coming at a time when you look at some of the biggest weights on the stock 600. Santander, Caixabank coming out this morning despite some pretty decent numbers coming out of both them. I'm curious how much of that is a geopolitical read-through that you're seeing right on your screen. By the way, you're seeing Banco Santander, one of your biggest underperformers this morning on the stocks 50. So interesting Spanish story there.
Yeah, down by 1.62%. So the banks generally are down this morning. Caixabank is also down. Sabadell is down as well. Why?
Yeah, despite the upgrade to guidance in at least the Caixabank story. So we got an upgrade to guidance on return on tangible equity and net interest income. And despite that, the Caixabank share price drops.
So the BBVA, which came out with positive numbers earlier on this week, is up this morning. HSBC is tracking higher. BNP Paribas is tracking higher as well. So this feels like it's not only is this a single stock story? Can we just put those two together and there's two idiosyncratic single stock stories that are factoring those stocks lower because BBVA is up. BNP Paribas
Santander has a costing as well because even though they have such a big exposure to really so many different parts of the world, it's not like Caixa, which has a more domestic exposure. They have the Brazil piece of the equation, but they also have a massive push in the United States. The Wall Street banking story that they're trying to expand, that perhaps eating into their bottom line as well.
So this is interesting because kind of where they fit in that in that US banking story, I think is really interesting, and they're trying to change that. Obviously, I was asking about where he's seeing consumer stress. He didn't see any consumer stress, the CFO, when we spoke to him. He talked about Brazil. He says that's not very rate sensitive, and they're actually expecting a pickup in the back half of this year. So he was trying to paint a positive picture around Brazil, which is one of the key things. They've got to get that top line moving in Brazil if they want their overall targets to be achieved. Anyway, Santander down after these numbers. It'll be interesting to see how we kind of retroactively assign a narrative to why the stock is falling.
We'll find something, I'm sure. Let's put the Spanish numbers in some context and think about the broader picture here. We're joined now by Monica Defend, head of Amundi Institute, here to talk to us about strategy and beyond. Monica, very nice to have you with us. We just wanted to have a moment to reflect on the sort of the highs and lows, I suppose, of the Eurozone economy right now, because we've got some strong commentary out of Spain today from a couple of banking CEOs there. We've also got some strong data out of Spain in outperformance in this GDP print. But as we heard from the Caixabank CEO earlier on, it's as if Spain is sometimes on another planet when it comes to the Eurozone. So what's the broad outlook for the Eurozone for you?
Well, we hopefully think that the worst is behind us. So moving forward, starting from the PMI, probably also Germany is getting out of the woods. Therefore, for the remainder of the year, we see this nice recovery playing out with Spain, that obviously is the shining star within the euro. A lot will depend on what the ECB will be doing, and on that front we expect them to cut, as they said. But there is a need for cutting rate just because the lending standards are quite tight. And this is reflected in the demand for money, for loans, and this will eventually have an effect on the real economy. So having in mind that ECB will cut, we start in June, we have 4 cuts in the pipe, as we believe the disinflation trend is credible. Much more credible in the Eurozone than it is in the US. This will give space for the ECB to move.
OK, 4 cuts over what time horizon?
Until the end of the year.
OK, so 4 this year. And what if the Fed does none or maybe just 1? I mean, that sounds like something that creates some divergence within the global economy that we haven't seen in a while.
Yes, that might be tricky. Empirically, the ECB didn't move any time before the Fed. So this will be already a piece of news. But they were quite clear, saying June will be the date. On the Fed, we expect them to start cut in July. But we are starting to penciling in the alternative scenario with the Fed doing less, 2 or even no cuts. In that case, probably there will be some reflection on the FX. and the US might start exporting inflation, which might be an headache for the ECB. So the solution is a data dependency, which is not really what market participants like. We really prefer structural forward guidance. But unfortunately, the macro environment doesn't allow this to be the case.
Nobody seems to have a good handle on where inflation's going next. So I think we're all in the same boat when it comes to that one, including the central banks. Do I buy or not buy European equities if the Fed is not cutting?
Well, on the UK market, probably there are ample of opportunities, and probably this is where already.
So the Fed doesn't cut. I can still buy UK equities. Can I buy Eurozone equities?
Yes, but with a caveat. So it's a market that is more playing on bottom-up selection opportunities that, broadly speaking, top-down asset allocation stories. So look and watch for small caps and the value high dividend stories.
So Europe's not a growth story anymore. There's no you want to be looking for the value rather than the growth trade.
Yes. The reason being that growth still is subdued when compared to the rest of the world.
Can we come back to the banking story really quickly? We've talked about it in the context of Spain, obviously, but this is a theme we're seeing with a lot of the banks in Europe. Buybacks seem to be a big part of the story as well, that capital return. But I think one of the questions in the context of the ECB finally cutting rates is whether peak margins are in, that outperformance in terms of net interest income is something that's going to be in the rearview mirror. How do banks sustain that performance if you are seeing, one, the buybacks become a relatively new phenomenon, and two, the ECB cut?
For sure, lower rates will be challenging, but not that challenging for the financial sector and the banks that has been diversifying over time their business. Again, probably it will be more a selection and stock picking story than a broad sector call.
And then let's go back to the sector call as well, and we'll go from banks to perhaps the commodity story in particular. How exposed is the European commodity sector to the China story as opposed to the U.S. consumption story?
I would say that the equity market and the euro area is more exposed to oil, if I have to pick something, meaning that and this relates to the Fed and the Eurozone importing inflation, the oil prices are priced in the US dollar. So if we open the gap and we open it too much, the Fed versus the ECB, this will be reflected into a stronger US dollar, which means eventually higher oil prices, which is not really what we want to hear in Europe.
Monica, can I get your thoughts on China? We're going around the globe with you this morning, but thoughts on China, because we're just getting some lines coming out of the Chinese Politburo saying they're going to use interest rates and the reserve requirement rate to support the economy. Also saying that China is going to study steps to digest the housing stockpile, and that's been such a big weight on the Chinese economy and the Chinese consumer. We've got PMI data that seemed to disappoint some, even if manufacturing was a little brighter overnight. What are your thoughts on China from here?
Well, first, the first quarter GDP numbers have been surprising the market on the upside, but we think that this is the past already. It won't last because of the imbalances that are pending on the Chinese economy, the excess capacity, the house imbalances that are still have to go. The prices have to go down. And last but not least, the consumer confidence that is still quite depressed. So all in all, if we plug the first quarter result on GDP, we've been lifting the GDP expectations to 4.5%. They were slightly below 4%, but we don't expect in the short term any big movement out of the Chinese economy. Structurally, is an interesting investment theme, but on the short term, there are better opportunities
out there.
Exactly.
Monica, great to see you this morning. Thanks for stopping by to see us. We really appreciate it. Monica Defend, head of the Amundi Institute. Thank you very much indeed. Let's move back to some of the single stock names we're watching this morning. Very much the kind of bottom-up story for much of the market today. The bulk of the core six in positive territory. Look, it's interesting to see Novo maybe weakening up a little bit. We've got numbers coming out, remember, over the next few hours. We're going to be watching Novo, going to be watching Lilly very, very carefully. But the bulk of the big European stocks seem to be having a little bit of a push higher this morning. Let's get some more names. Let's fold a few more stories into the stock moves that we're seeing. Joe Easton's got all the details.
So we have got a 2% gain in HSBC at the moment here in London. Noel Quinn is on his way out of the company. The stock's trading at a 5-year high, but the story really is about the share buyback, a $3 billion buyback. That is higher than the analysts were expecting. They were looking for around $2 billion. So that does seem to be driving that stock higher this morning, despite the CEO's surprise exit. Now, the two stocks in the middle here, both of these are actually buyback stories. Look like a lack of buybacks at both Caixabank, which you were discussing earlier, and also Prudential weighing on these stocks. City analysts noting that Caixabank has had a very good run over the past year, so potentially a bit of profit taking on that one. And Prudential is the Asia-focused insurer listed in London, though profits not as good as expected. And as I say, no buyback, bit of a disappointment there. In terms of Hargreaves Lansdown, a massive gain for that one. We're up 7.5%. That's the best performer on the Stock 600 index today. There is concerns about Vanguard stealing their market share. That has been a continuing theme, but Hargreaves giving strong numbers today, relieving some of those concerns at the moment. In terms of your worst performing sector today, it is the autos. These are leading losses on the Stock 600 this morning. Mercedes, Volkswagen, Stellantis, all dropping following those earnings. A lot of it looks to be due to the EV sides of the business, not as strong as expected. Some concern around China demand as well, and margins. We're seeing a read-through into Porsche, also BMW today. All of those stocks declining following these weak numbers out of all three of those firms. And down the bottom, we got Air France, a 4% drop in that one. This looks to be due to their costs. They have got earnings out today. Wages massively going up. A lot of strikes as well over in France, pushing up the costs and reducing their profits. So Air France is declining today. We also did have some numbers out of Lufthansa, but they also previously reported it's almost priced in. But Air France down 4% at the moment. A couple of other stocks in the earnings. It's all about earnings today. We did get Glencore earlier, pretty much in line with expectations. There was that story that Anna mentioned about investors pushing back of the spin-off of the coal business. That does seem to be the key theme at the moment. We're up 0.2% there. Carlsberg extending the year's decline. People trading down in beer, despite analysts being very positive on that one. The sales looking slightly weak on that one. Adidas, the Yeezy effect still weighing on the inventory at the moment. We're down 1% following sales from them, but they did also report a couple of weeks ago, so not huge movement in the forecast today. And finally, Logitech. This is the computer technology and hardware firm, makes earpieces and that kind of thing for computers. Very strong numbers out of them over in Switzerland. That one gaining 6%. Pretty big move for Logitech over in Zurich today. Keep an eye on that one as we continue trading.
All right, Joe Easton from our equities team walking us through the major stock stories that we need to know. We thank you so much for joining the program. Coming up, European airlines not off to a flying start this morning. Air France, KLM, and Lufthansa reporting first quarter earning losses. We're going to discuss what the aviation industry can do to bounce back. Stick with us. This is Bloomberg.
Sixteen minutes into the session, 17 minutes into the session. The moment has finally arrived. We get to talk about planes, trainers and automobiles. It's been a busy day for the three sectors, and this is a board that maybe signals that the first quarter was a first quarter to forget. Look at this. Lufthansa, miss. Air France, miss. Look, people still want to travel, but if you've got the kind of cost picture that these guys have got, it's going to be a struggle. Adidas, a little bit more mixed. The Sambas are selling well right now. I understand they're called terrace shoes. Terrace shoes are doing very well. You used to wear them on the football terraces. But then we get to the auto section, and we're a miss and a miss. We can fold in Stellantis as well, but Volkswagen's not done well. Mercedes has not done well. Planes, trainers and automobiles are not having a good morning at all.
They're not. The best we can find is the trainers story, which is a little mixed. You mentioned some of the lines that are selling well. The Samba. Apparently, Rishi Sunak even apologised for wearing Sambas, but it doesn't seem to have dented their popularity, does it? He was caught on camera wearing a pair, but still they sell fast.
Maybe Guy Johnson can wear a pair and reverse some of the damage. What do you think?
I think they may increase the damage. Not reverse the damage.
You're expecting a lot of Guy there.
That's fair.
Increase the damage. Style icon, no. There are many things that I am not. We are joined by one now, though, so let's... that's my introduction to Benedict Hamill, who joins us on set to talk about... We're going to do planes first. Planes, trainers and automobiles. We'll start with the planes. Demand is really good. So people still want to fly around the world. You can see a lot of airlines at the moment still talking about the demand story. There's some signs of slowdown in the United States, but globally, generally, demand is still fairly good and the summer looks strong. The problem is, if you're Air France, if you're Ben Smith or you're Carsten Spohr over at Lufthansa, you've got a big cost problem. And that is what seems to be really showing up in the first quarter.
Yeah, you're absolutely right. And both companies said separately today that they will tackle costs into the latter part of the year. Lufthansa's freezing some hiring. They're going to review some programs. We don't know exactly what the contours of this are, but they said that they would give us a bit more of an update at 10 CET. That's when Carsten Spohr speaks to the public. Same picture at Air France. You're right. It's a bit of a split-screen sort of year for them. The outlook into the second half is pretty good. People are booking. Summer looks strong. The strikes are behind them. They've managed to reach agreements with companies. But, yeah, the first quarter, and I think Carsten Spohr said as much as let's move on, let's forget the first quarter, and let's look into the second half of the year.
So we leave behind a quarter of strikes and we look ahead to the summer, which is typically where, in the Northern Hemisphere for European airlines, where a lot of profits are made. How is that summer, then, looking at the moment?
Looking healthy at the moment. So the bookings are looking up. Long-distance travel is back. And you've seen it not just on the airlines front, you've also seen it in the way that companies are repositioning their fleets. We've seen some really big orders from companies buying more wide-body aircraft. So you can see beyond this year even that they see that demand. Lufthansa, a bit of a fly in the ointment, they said. We're not getting the planes that we'd like. There is a disruption there. We've seen it particularly on the Boeing side. So while the demand is there, the question is really do they have the metal, do they have the planes to really get that demand served?
Is this just a seasonal crunch, then, in terms of kind of that capacity hit? Is it something that then abates, say, in the fall, for example?
It is seasonal. The first quarter is usually a very weak quarter. Most airlines have a loss in the first quarter. Just you've come out of a busy Christmas period, you're sort of pre-Easter, and the bookings aren't as strong yet. So usually the first quarter is sort of where they lose the money and then they sort of suck themselves full of profit again through the latter part of the year. The question really is, are the strikes behind them? Can they maintain this? And will the demand remain as robust as they hope they will? Right now it's looking pretty good, but the next weeks will show.
What differentiates IAG right now from Lufthansa and Air France? IAG's share price has been going up. I see analyst call after analyst call painting a positive picture for what they're doing right now. Is it simply they haven't been... The strikes were put behind them earlier and therefore it's not impacting the numbers? Is it they have greater exposure to the North Atlantic and the US economy is doing well and therefore, as a result of which, we're seeing better profit numbers coming out of that route? Why is... You can see it here on the chart. Why is IAG going up and Air France and Lufthansa going down?
I think all of the above that you mentioned. I think the North Atlantic route is not to be underestimated. It's one of the most profitable routes out there, and obviously British Airways has a real hold on that. And also they haven't had the disruptions from strikes as badly as Lufthansa in particular did. I mean, just to give you a number, 350 million euros just in the first quarter, and then a sort of a lingering cost in the second quarter for Lufthansa. A lot of people are spooked by what's happening on the strikes, and Lufthansa's experienced that people are saying, you know what, I like Lufthansa as a brand, but if they keep staying on the ground, I'm going to go somewhere else. I'm going to go to the low-costers. And that's something that's really trickling through and is lingering throughout the year.
Benny, what's the story with business travel these days? Because, yes, the return of the North Atlantic doing well is typically good for BA, and premium travel is usually part of that story. Post the pandemic, business travel has not been what it was. Who fills the front of the planes these days, and what's the story there?
It's still not really back where it should be. We're still at about 80–90% of capacity, whereas overall the market is beyond that. Interestingly, a lot of people from traditionally the back of the plane have migrated to the front. So you've seen that movement within the cabin, that people who saved up some money during the pandemic are feeling, look, I want to splurge a bit, I want to have a good time, I want to go into business or premium economy. So you've seen that migration to the front of the plane. But traditionally, you know, it's the front of the plane that pays for the back. That's really where the money is made, the front. And the question is, at what point will people run out of those savings and sort of start migrating back to the end of the plane?
Do you sit in the front of the plane? I imagine.
Only when I'm travelling with this
Only
fine
when he's dressed
outfit.
right next to the pilot.
Only when I'm wearing Samba shoes. Yeah, so.
Bloomberg's Benedict Hamill there, leading our global aviation coverage, testing out the front of the plane for himself. We thank you so much for joining the program. From planes, we go to trainers and automobiles. I feel very wrong saying trainers. I feel allergic to it.
Only today you have to.
I know. It feels strange. I feel like we need a little bit more appreciation for that pun, but it all comes as Adidas had a mix, and I said Adidas too. See, this is someone must be doing this read. Had a mixed first quarter earnings story. Mercedes and Volkswagen also in the red this morning after their first quarter report. Let's get more on the story. Oliver Crook in Berlin with the right pronunciations, I'm sure. Ollie, let's start with the trainer story because that seems to be what Anna and Guy want to talk about. Talk to us about the weakness in sneakers.
Yeah, I mean, listen, overall, there was a couple misses on the top lines from the earning numbers, but the outlook was relatively positive, right? They were saying that basically they see growth in all of the major areas. They were able to charge more for sneakers. Profitability was up. Their pricing, right? This is a sort of key metric for the consumer staples. Their inventories, they managed to sell those down by 20%. I remember last quarter, this was a big concern going into it where they had reported, I think, one of the first losses they'd done in 30 years. And sales are up in, Europe by 14%, Greater China up 8%, North America down by 4%. That's another sort of trend that we're seeing where you see sort of Europe sort of supporting China starting to come back. And then actually the United States, where this consumer is allegedly much stronger, is starting to decrease. And, you've seen as a consequence, Adidas outperform Nike, for the first part of this year, up by about 25%. Nike's down 13%.
I'm all in favor of basically this. Everybody wears white trainers. I'm shocked white sneakers. Maybe some colour. We introduce some colour. Maybe that's not a bad thing. Again, my fashion
White
advice.
sneakers are crazy. They get dirty so quick.
I know, everybody wears them. Ollie, Carsten Spohr over at Lufthansa talking about the first quarter being a quarter to forget. Is it the same for the automakers as well? They're still pointing to the idea that actually the back half is going to be better. Do we believe them?
Yeah, this is absolutely a quarter to forget for the auto industry. Part of that has to do with the comps from a year ago where you saw sort of profit at Volkswagen down by 20%, Mercedes down by 34%. We had Stellantis out just a couple of minutes ago, about an hour and a half ago, down by 12% in terms of revenue. So, yeah, really not a good quarter going forward. The question is, they have some model change up that is sort of slowing them down, but they're also short on the margin. So not only was it bad on comps, it was bad in terms of what people were expecting. And for Mercedes, you're also seeing another thing happening, which is that luxury trade that was sort of seen as invincible in the auto sector for a number of quarters after the pandemic is starting to falter, which is an issue for Mercedes because they've basically tied their entire business to the luxury and stepping away from the mass market. The question also around EVs slowing down. BMW has been able to hold on, but the others have been falling. And the question is Q1 the trough? That is what Mercedes is saying. That is what Volkswagen wants us to believe. They're holding on to their full-year outlook, but they have to convince, Wall Street and investors. And this morning, as you could see by the moves in the shares, they are not.
So a tricky start to the year. No change in the outlook, no downgrading to the outlook, but will that be sufficient? Certainly the shares weaker, as you say. Volkswagen and Mercedes both down by just over 2%. Oliver, thanks so much. Bloomberg's Oliver Crook with the latest on some of those corporates reporting out of Germany this morning from the auto space and consumer-facing businesses as well. Fashion brands. Coming up, we are on inflation watch as European data is released that may give us an insight into what happens with treasuries in the short term. Really interesting to look at this European data. We've had the Spanish GDP coming out stronger than expected. We got Spanish inflation earlier on this week. We also got French GDP this morning, telling a brighter than expected story perhaps around the growth narrative for the Eurozone. Where does that leave us with our expectations for cuts from the ECB? We'll get into that conversation shortly. This is Bloomberg.
This is Markets Day. We're at 30 minutes into the European trading day, seeing a little bit of a divergence on the index level from the Stock 600, which is down into the red. The FTSE 100, though, outperforming this morning. It does seem to be an earnings story that's driving the picture lower, at least on the index level, specifically for the Stock 600. You're seeing a lot of the banks, the Spanish banks, I should say, weighing down on the index. Plus, you got that German story as well. Mercedes, Volkswagen, some of the airlines as well. And not to mention, of course, Adidas, all in the red this morning, again, pulling the entire index down. But there's a macro story as well worth exploring because whereas the earnings story may be a little weak this morning, the economic growth is a little bit strong. French economic growth in particular accelerating in the first quarter. Spain also performing better than anticipated, perhaps boosting the chances that the euro area emerged from a mild recession. The latest figures among a slew of macro data out of the continent as traders look for reassurance that the ECB may stick to its planned rate cuts. Eurozone inflation, of course, out at about 10 a.m. Let's get a little bit of a preview here. Bloomberg's Euro area economy reporter Alexander Weber joins us from Frankfurt. Alexander, pleasure to have you on the program. This kind of re-inflation or re-acceleration, I should say, from some of the periphery economies, but also you're seeing in Germany as well. Is this cause for concern, or is this a one-off?
So some of this is part of the expectation. ECB officials have said, and we know that inflation is going to be a little bit bumpy now in the coming months. That's because governments are withdrawing some of the aid measures that they introduced during the energy crisis, and that makes for very unfavorable statistic effects now. So at the same time, inflation has come down a lot. We're not very far from the 2% target. And as long as it doesn't re-accelerate for reasons that cannot be explained because of excessive demand, for example, then the ECB shouldn't be worried too much.
So what are we expecting out of the Eurozone numbers a little bit later on? What are they going to tell us, and are they going to confirm June?
So the headline number is probably going to show a steady reading of 2.4% according to estimates. At the same time, we think that underlying inflation is going to come down a bit. That's going to be an important piece of mind for the ECB because they are more worried about sort of domestic price pressures at the moment. The services inflation that's strongly driven by wages. That's been really sticky in the last few months. If that comes down as expected, that will give the ECB the sort of assurance that it needs to stick to its plan for a June rate cut.
Yeah, Alex, good morning. So if we get that June rate cut, I mean, what are we looking for on the wages story to solidify our expectations around June? Because we know the ECB is watching wages. There was talk of the markets being able to see more fully the wage data that the ECB is looking at. What is the role of that wages story right now?
Yeah, so the ECB has long said that they're really keen to see the wage data in the first quarter because that's when a lot of the wages reset, negotiations happen, and they want to see how that pans out. Now, there's already been some signs from national economies that this wage acceleration is slowing down. That will be important for the ECB. But what that means in concrete terms for the number of rate cuts this year is a bit difficult to say. It depends on various factors, also on growth. If growth keeps surprising to the upside and inflation comes in a bit higher than expected, then I don't think we're going to see a second consecutive cut in July already, because that would signal to investors that, there's going to be a substantial number of cuts this year. And therefore, the ECB is probably well advised to go a bit more slowly. That's what we've been hearing from policymakers. There are also external factors like what the Fed is going to do. All of that is going to factor into the decisions at the ECB.
Alex, great stuff. Thank you very much indeed. We'll fold that number in a little bit later on. Alex Weber joining us out of Frankfurt. Let's carry on the conversation. George Lagarius, chief economist at Mazars Wealth, joins us now on set. George, nice to see you. Thanks for stopping by. Nice to see you. Normally to be found in Athens. Great to see you in London. Does the ECB need to be cutting rates right now? How aggressively does the ECB need to be cutting rates? The expectation is that we're going to be seeing one cut, maybe we get two, maybe we then get a little bit later on in the year, 3 and 4. But what is your kind of assessment once you plug the ECB into the global picture?
The ECB wants to cut rates. The question, and they will do something in the summer.
Yep.
That's very likely. But can they really enter a rate cut cycle? That's the question here. Their basic rate is already 1% below the US. If you cut too aggressively, you risk capital flight. Look at what happened to China, where all the FDI crashed, as the rate differential grew.
Yep.
So the ECB could very well be faced with a similar situation. If you get a weaker euro, you import inflation from the US. So they can't really cut that aggressively. They can't ignore the Fed.
So the Fed goes, once this year, the Fed goes zero this year. What is the parameter that the ECB is operating in terms of the cuts that it can deliver this year, do you think?
They can maybe go with 2, I'd say very maximum 3. But, and again, that is if inflation data helps them a lot. But they cannot enter a proper rate cut cycle, which means deliver continuous cuts, unless the Fed gets going. And right now, the Fed can't do that.
OK, the Fed can't... Good morning to you, George. The Fed can't do that. The Fed, the direction of the conversation has certainly been in the higher for longer of that nature recently, hasn't it? So what kind of visibility do you think the Fed has right now, or do we have on the Fed's trajectory from here? Because we've gone from the start of the year thinking 6, maybe 7 cuts to just 1 or 2 now. I mean, what is your expectation there? Because the ECB, as you say, the ECB conversation is linked to it.
I think the visibility is 0. I don't think Jerome Powell drives anything. He's a backseat driver to Janet Yellen. Janet Yellen is driving massive fiscal expansion in the U.S. Okay, and that is driving growth up. The labor market is very robust. So all Powell can do is watch. And maybe we have to start considering the idea that at 5.5, the interest rate might just be appropriate.
OK, so it might be appropriate. So you might not get any cuts. So do you lean into things that are going to benefit from higher for longer rates and a stronger growth story, continue to benefit from a stronger growth story in the United States?
I'm more worried about, look, obviously growth is good, OK? And you want to focus on growth sectors. You want to focus possibly on a manufacturing rebound. You want to focus on tech, on all of the cyclicals. Having said that, I'm much more worried about the bond market. Okay, because the bond market had a lousy 2022, sort of tried to rebound in 2023, and again, 2024 is bad. And, you know, it's the 10-year bond is the cornerstone of most portfolios around the world. It's a cornerstone of pension funds. Okay, it is what banks have in their balance sheets, and now they're losing out. And maybe, you know, that's unrealized losses, but it keeps adding to that pressure. Okay, so I'm much more worried about the bond market. I think the bond market, especially if the rate is appropriate, so if we really go higher for longer, say 6 months, say a year, inflation is not sticky, by the way, in the US. It's stuck around 3%. Okay, so if they really go higher for longer, there's going to be immense pressure in the bond market. Those people who lost money in 2022 and now again in 2024, they're not getting it back anytime soon.
So many questions. Let's start with the bond market in particular that you were talking about. If Janet Yellen is more in control, perhaps, in the Federal Reserve than Jay Powell is, talk to us about the Treasury buybacks versus the Fed's QT program. Which has a bigger effect in terms of bond supply right now? What are you watching more closely?
Well, QT doesn't seem to have much an effect on anything. In fact, there are papers out that say, you know, QT is not the opposite of QE. And by the way, I stand corrected in this because I thought it would have a massive impact, and it doesn't seem to have. So it's the Treasury supply that will drive yields up. And I think, honestly, it sounds an oxymoron, but I think we should focus more on what Yellen says right now than what Jay Powell will say in the meeting this week.
But on that point, though, I mean, the whole point of QE initially kind of created this bid, this endless bid, right? The Fed was going to be the buyer of last resort for the bond market. It feels like the Treasury has now taken on that role in terms of ensuring that kind of liquidity. My question to you, George, is when does that crack? What are there early signs that the bond market may be either seeing too much supply coming off of the auctions, which aren't consistently seeing that kind of demand, or if we're seeing any other sort of red flags early on from Yellen and her cohorts?
So when does that crack? First of all, in terms of pressure, it doesn't. It's the global reserve currency. It's a license to borrow. It's a license to print. Okay, just for historical references, it took 150 years after the collapse of the Spanish Empire for the Spanish dollar to collapse. Okay, so that means, you know, people will still buy the Treasury and people will still buy the dollar. Okay, no matter how much money the Treasury wants, chances are it will get it. Okay, so yields will, may gradually go a little bit higher because you don't have the Fed helping you anymore. But I don't think you'll see cracks in the market. And honestly, I am preparing for a higher yield world.
So so you're not expecting cracks in the market. What breaks in a higher yield world? It has to have an impact. They're doing it for a reason. What is the effect of that in terms of asset prices? Where does that show up? Where doesn't it show up? Where can I hide? Where do I need to seek safety?
First of all, you need to be careful of businesses or governments or any sort of organization which built their welfare on the assumption that rates would be low forever. Okay.
Examples?
I can't think of many, but for example, think about the Eurozone. Okay, the Eurozone fares much better with lower rates than with higher rates. Higher rates create pressure, and they exacerbate centrifugal forces in the Eurozone. Okay, so that is an area where, at least for me as an economist, that is an area of potential pressure. Okay, and then there's banks. Yes, they do like higher yields, so that's your profitability over there, obviously. But also, they have a lot of bonds on their balance sheets. Okay, those unrealized losses are only getting bigger. And that means they're becoming more vulnerable to potential runs like they did, especially the smaller banks, like they did a year ago.
George, we're going to hear, you've mentioned that listening to Janet Yellen's really important. Well, we're going to hear from Janet Yellen today. She's going to be testifying before the House Ways and Means Committee about Joe Biden's fiscal year 25 budget request. That's US morning, that's coming up. So we know what happened in the past with regards to fiscal, and it's been much talked about, the fiscal boost the US got. We see that in various forms, post-pandemic, the IRA, all its forms boosting the US economy. What do we watch out for from here, though? I mean, clearly US politics and the election might get in the way, but in terms of that fiscal story, if it is so important to you, George, and where markets go?
I don't expect the narrative to change. Not 6 months before the election. It's growth at all costs, growth or bust, and domestic growth, domestically focused growth at that. Okay, I don't see any reason why Ms. Yellen would change her narrative just so close to the election. So just to be clear, I'm not expecting much. I am expecting growth at all costs because winning the election is, right now for the Democratic Party, it is the bigger objective. And we'll see any possible signs of fiscal restraint thereafter, although I'm not expecting much. Okay, I honestly think that the U.S. is leaning heavily on the power of the dollar, and it's growth at all costs for the third consecutive administration.
A final question to you on the power of the bond market relative to perhaps the power of the dollar at the moment. Are interest rate expectations, as a function of kind of so much positioning on the front end of the curve, driving policy faster than the Federal Reserve?
Are interest rate expectations driving policy faster than the Federal Reserve? Yes, they are. They are. I don't think people are listening to what the Federal Reserve says much, because if you notice, it's not just Powell, it's all of the officials. And their story is inconsistent. Okay, you see doves now making hawkish statements. You see hawks making uber hawkish statements. Or you see people who are moderate, like Bostic, for example, talking about possible rate hikes. Okay, so they're not driving much. I think the markets are realizing now that the Fed is following. The Fed is, as a previous speaker said, the Fed is data dependent, which means they don't know much more than we do in this debate.
Great to catch up, Jules. George, really interesting things Big said this morning in terms of kind of how we should be sequencing and thinking of how this policy is going to work. Nice to see you. Stop by any time. George Lagarius, Chief Economist at Mazars Wealth Management. Coming up, we're going to talk about HSBC. HSBC's, if I can speak this morning fast, HSBC's shares are gaining this morning. This gentleman here, Noel Quinn, has decided unexpectedly he is going to be stepping aside. His exit from Europe, and you could argue Asia's largest bank, certainly Europe's largest bank, there's a $3 billion buyback, which seems to be having maybe a bigger impact. We'll have more reaction on all of this next. This is Bloomberg.
GDP growth this year is going to be around 2%. We are creating employment, jobs, unemployment levels are really low. So the macro picture in Spain is very, very good. You've seen our results. We are at historical levels in terms of revenue, also profits. Same for the other Spanish banks. I think the activity in general in Spain is very, very strong, and banks are benefiting from that.
The economy is actually helping. We're expecting close to 2% growth this year, and we're actually creating jobs at close to 3% per annum. Job employment last 12 months was 600,000 in Spain. Obviously, when we look at the numbers in Spain vis-a-vis the Eurozone, it looks like we are in different continents, and obviously at this stage we're seeing this trend going forward.
Caixabank CEO and Santander CFO speaking to us earlier on this programme, talking about the strength of Spain's economy and how the strength is boosting their businesses. And that's certainly been the positive narrative that we've heard a lot about today, both from those CEOs, CFOs, but also in the data, the Spanish GDP print beating estimates. Not helping the share prices of those Spanish banks, though. We see Caixabank and Santander both down by more than 2% this morning. Let's stick with the banking sector. HSBC's CEO Noel Quinn is unexpectedly stepping down as the lender starts searching for a successor. The surprise move comes as the bank reports pre-tax profit that slightly beat expectations and, crucially, also announced a share buyback of up to $3 billion. Let's get analysis on this and some of the other banking news flow. Bloomberg's Charlie Wells joins us with a breakdown first on HSBC. Charlie, good morning. Nice to see you. So tell us more about the significance of Noel Quinn's surprise retirement announcement. He's looking forward to a portfolio career, he says.
No one was expecting this. I mean, his pay doubled last year. HSBC has been performing fairly well. And what we know about HSBC is they do tend to make these announcements about these reshuffles on some of these earnings calls. They did this previously with the CFO change. And look, I mean, Quinn was in charge of this bank at an incredibly dramatic time. He officially took over at the height of COVID. We all remember he successfully saw off that Ping An insurance attempt to try to break up HSBC. That was a period of drama. And of course, he's been at the helm of this bank as tensions between China and the West have really ratcheted up. But of course, you know, his departure makes way for a successor. And we do know that HSBC has been pivoting towards Asia. We know that they've benefited from higher rates, but they need to pivot away. They need to diversify. They need to try to bring in some wealth revenue. And I think this Asia focus, you know, the executives this morning have been talking about potential successors. They haven't said exactly what they're looking for. They said they've been looking for internal and external candidates, but it seems like that will be crucial.
Put that in the context of the numbers we got this morning.
So look, pre-tax profits beat estimates, net interest margins beat estimates. We got some great revenue numbers on wealth management, which I was just saying is something that this bank needs to try to diversify. And of course, there's that $3 billion buyback. Now, analysts have been talking about a potential $2 billion buyback, so that's, you know, a bigger number. People are going to like that. But of course, they need that diversification that they need, you know, they need to be able to succeed in a world where rates go down. And I think something that's been a little disappointing that we've been hearing is that forward guidance from HSBC. So that's been maintained from what they were saying in February. And with this idea that rates could be staying higher for longer, some analysts had hoped that that could be a more positive story, but it's staying the same.
My career has been littered with having to cover banks that have, on a Monday morning, announced that they have a major trading loss and it's going to have a big impact. Bearings, Curvial, the list goes on and on. SocGen, it feels like it's dodged maybe some tail risk at sort of events with some traders that potentially were putting on positions that could have generated some losses. Didn't happen. But it just reinforces that risk, and it is out there.
Guy, I mean, that is a really good point. And look, Societe Generale is haunted by that 2008 loss of, I think it was $5 billion from a rogue trader in Paris. So let's zip across the world to Hong Kong, where, as you mentioned, there were two traders who we know, according to a Bloomberg scoop, last year left the Delta One group in Hong Kong. So it was a trader. Same group. Yep. Exactly, Delta One. So it was a trader, and it was a head of that group. And this was after Societe Generale conducted an investigation and found that the risk management systems had failed to pick up on some risky trades. And now those risky trades, interestingly enough, were about a lack of volatility in the Indian stock market. And so if those trades had gone wrong, that would have cost Societe Generale hundreds of millions of dollars. And so what this really speaks to is the issue of risk management, right? Why was this not picked up on? We know that this had to do with some timing issues, but this has been a huge focus for Slavomir Krupa, who's the CEO of Societe Generale. We know that in Hong Kong there have been issues with risk management. And so, you know, Probably no surprise why these two traders departed, but of course certainly raises red flags.
OK, risk management once again to the fore. Charlie, thanks very much for putting it on our radar. Bloomberg's Charlie Wells with the latest on the financial services sector. From that, we go to macro, and there's plenty to watch today, 10 a.m. UK time. So we're in around an hour and 7 minutes. Euro area CPI, we'll get those numbers. That's the first reading for April, so crucial to watch that. Later, we get US earnings coming fast and furious from McDonald's, Starbucks, Coca-Cola, Amazon, and Eli Lilly. So a host of sectors, host of names, and lest we forget, the FOMC meeting begins. We don't get their conclusions, of course, until tomorrow, but they begin to talk. In terms of that Eurozone data, we got the French economic growth that accelerated in the first quarter, the Spanish number pretty good. All of this stoking hope, our Bloomberg News colleagues tell us, that the European recession could be over, as leaving it behind at the end of last year.
For now.
Yeah.
We were just hearing from George that maybe actually in a higher for longer rates environment, maybe that risk maybe re-emerges. And maybe we shouldn't be listening to Powell over the next 24 hours. Maybe the bigger risk is coming out of Janet Yellen. And we should be hearing what she has to say on the Hill a little bit later on.
Yeah, the buyback kind of announcements there. That $41 billion extra on the refinancing was kind of shrugged off by the markets when it comes to the... But the fact that you did see kind of this tiny intraday move in a piece of data that traditionally would not move bond markets, I think speaks a little bit to the
the market's worried about supply. The market was also expecting that number not to go down, not up.
Yeah.
And in the big scheme of things, the number you kind of laid out is a tiny fraction of kind of what we care about. But it just maybe speaks to a trend that we are not slowing down in terms of the demands that are coming through from the government.
Can we talk about McDonald's, please? Because I am so excited
if you like.
The FX story in McDonald's is really important. So is this FX story in Starbucks. And I think and the reason I bring this up is not just because I'm so hungry right now, but also because the FX story matters, especially because McDonald's and Starbucks both have most of their revenue come from outside of the States. This is a great early indicator about what those FX pressures look like when you're talking about getting revenue from China, India, Europe, etc., into what's likely to be a stronger dollar story from here on out.
Do you want to buy dollar earners? If you look around Europe, there are plenty of dollar earners out there. Is that the way you want to be maybe making this trade? If the dollar's going to stay strong, is that where you want to be thinking about your equity exposure?
So that's one thing we're watching later on today then. A couple of the themes that have come through this programme, I think the strength of the Spanish economy, and that's one of them. The weakness that we're seeing in the first quarter for some of Europe's industrials, or rather big consumer-facing businesses like Volkswagen, Mercedes. I mean, both of those stocks pretty weak this morning.
Lufthansa, Air France.
Yes, add those to the list. But it's been a lacklustre day, hasn't it? They haven't downgraded expectations, and so whether the market believes they can ramp things up and deliver more with new vehicles is the question.
Next quarter's going to have to be good. A first quarter to forget. That's what Carsten Spohr over at Lufthansa has been talking about, and you could apply that to the automakers and some of the airlines this morning here in Europe. Sneakers are selling, though. That's good.
So
planes, trainers and automobiles.
Weakness in Germany, strength in Spain. Who would have thought? Can we play Enrique Iglesias now to commercial break?
2011 on its head.
Indeed. I'm waiting for Enrique to be our theme song for this new show.
Pretty hungry.
I'm hungry.
Time for breakfast.
I'm on a Spanish holiday mindset. Lucky for us, that does it for markets today. The Pulse is up next. Francine Lockwell will take you from here. This is Bloomberg.